Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.
In this lesson, we'll look at review questions 7 through 10. Let's begin with review question number 7. Jeff just purchased a large tract of land that he intends to split up and resell as individual lots. True or false? The basis for each lot cannot be calculated until all of the lots have been sold. Is this true or false? The answer is false. Jeff must calculate his basis in each separate lot before the first sale is made. Now let's look at review question number 8. Which of the following is not an example of a capital expense related to real estate? A. An adjustment to a business office building which adds to the property's value. B. An adjustment to a rental property which extends the life of the property. C. An adjustment to real property which adapts the property to new uses. Or D. An adjustment to an investment property which maintains the property in like-new condition. The answer is D. Capital expenses are for costs that add to a property's value, or extend the life of a property, or adapt the property to new uses. Repairs which maintain property are not generally considered capital expenses. Now let's look at review question number 9. Depreciation is a type of rateable deduction which applies to business property with a useful life of at least A. 1 year, B. 3 years, C. 5 years, or D. 10 years. The answer is A. Depreciation is a deduction that allows a taxpayer to recover expenses for business property that has a useful life of at least 1 year. Finally, let's take a look at review question number 10. True or false? When a taxpayer takes a Section 179 deduction, his or her basis in property is reduced by half the amount of the deduction. Is that true or false? The answer is false. When a taxpayer takes a Section 179 deduction, his or her basis in the property is reduced by the exact amount of the deduction.
Like what you see? Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.